Welcome back. You are watching Metropole Television. My name is Simba Elijah Charles Keter. This is your economic review. We are settling into the biggest headlines that you are waking up to this morning. Talk to us at Metropole TV KE across all your social media platforms. Wow, let me introduce the panel that we have for you this morning. We are joined by WAHOME NGARI, who's a financial literacy coach. Mr. NGARI WAHOME, good morning, sir.
Good morning, and thank you for having me here.
Anytime, always a pleasure. We are also joined by STELLAH SWAKEI, who's an investment analyst at a CYTONN investment. STELLAH, good morning. Fantastic. Happy to have you around. Now, a decline in the share price of Safaricom Wednesday saw investors on the Nairobi Securities Exchange, NSE, Wednesday lose about 54 billion shillings in paper wealth, which marked the biggest single-day decline in 4 months. Metropole Harvest data put the market capitalization at a 2.776 trillion, the largest cap since May 28, 2021, when the booth shared 58.5 billion. Safaricom share dropped by 1 shilling and 10 cents Wednesday to close at a 41 shillings and 80 cents, with the valuation of the company dropping 44.07 billion shillings. Now, top banks and EABL also shared value Wednesday, contributing to the market cap erosion, mainly on the price corrections following recent rallies linked to the good financial results for the half year to June. Safaricom accounts for 60.3% of the NSE total market cap, meaning that any movement on its price trends or tends to have a pronounced effect on the performance of the market. Good. Let's look at that data then from Wednesday and make sense of it this morning. All right, we're going to start from market capitalization. They're going to say that big drop as from 21st of September. Now, that's why the conversation point is. You say we dropped up to around 2.776 trillion. And if you see where we're coming from 2.84 trillion. That's a big drop as well when you look at that as well. Now, let's cross over to the next one, Safaricom. And you're going to say that share price trend, same thing. I mean, you can actually say that graph is just pretty much the similar thing that we're saying there, that drop by 1 shilling and 10 cents that made them close at that 41 and 80 cents is exactly what we're talking about, that made that 54 billion shillings in investor wealth, we're talking about paper wealth, be wiped off. Now, as we prepare to see exactly how Safaricom closed market trading yesterday, and if you could actually just run the top movers list, you're going to say that again Safaricom closed yesterday with the biggest movement. Again, they're talking about 7.9 million shares traded, to be exact, 7,128,200. And even the banking quarters are also recording a big movement. KCB Group PLC coming in at 4,419,900. Equity Group Holding PLC 3,843,700, and the Cooperative Bank of Kenya 2,816,900, sort of showing you exactly this correction that we've been talking about in the market as from Wednesday, with foreign investors taking a net selling position. Let me start with you, STELLAH. Yes, does that look to show that indeed Safaricom has quite a big hold at the NSA?
So, Simba, everyone knows, or every investor is aware, that the equities market is highly volatile, and that this is at par with the returns that one should get. So the higher the riskier the investment asset, the higher the return.
Yes.
So market corrections are a sign of an economy that is performing well, and this shows that this market, the NSE market is having a positive impact on the economy.
Yes.
So as such, investors with a high risk appetite are usually attracted to the equities market, and since the upside is also high and the risks for this The high risk for the investments have potential for high returns. So for every investment, again, time is a key factor, and analysis should be done from time to time on any investment, especially these stocks, to determine the potential. So Safaricom has potential for growth, and as I said earlier, market corrections are an indicator of a healthy stock market.
Yes.
As rise in the stock markets might have adverse implications for an economy. So usually, a change in the stock market rates occurring in the course of maybe a trading section is unhealthy for short-term investors who might have, as I've said, time is a very important factor. So for a short-term trader who is looking for a return within a short period of time, such an activity of market correction might cause losses to them. But
Yes.
for investors with a high horizon of time, the market corrections offer opportunities for investors to buy the stocks and maybe accumulate the capital through gains when the share prices appreciate. So really, it's not easy to tell when market corrections will happen.
Yes.
But for both stocks, Safaricom and also equity, KCB, these are stocks with high potential return. And if an investor is keen enough to do the analysis and get to know whether the stock will have a rise or will depreciate, is a very important thing.
Pretty
So
much.
this is where an investment analyst comes in to tell you whether the price will appreciate or the price will depreciate.
Pretty much. Stella, just
Yeah.
before I bring in WAHOME this morning, it's that impact that we're talking about. That just, if you look at that share price movement, it's just 1 shilling and 10 cents that then resulted in a 54 billion worth of paper world lost on the trading sanction at the NSE Wednesday, leading to a bigger market cap cut one that we just saw back in March, May. I mean, the influence of Safaricom on the NSA, is that an issue that we should actually stop talking about because we can't change it? There's no regulation that we can bring in to change it. Should we just accept that Safaricom should be guarded properly, because any little thing that happens on a particular stock might as well lead to our local boost crashing?
Yeah, that's very true. Safaricom should be guarded very carefully, because a stock that holds more than 50% of an entire securities exchange
Yes.
should be handled with much seriousness. So I really think we should guard Safaricom to hedge investors against losses, and also to attract more investors, more foreign investors into the economy. Again, on the flip side, we've said that market corrections are an indicator of an economy or a securities exchange that is healthy. So we can hold and employ a wait and see stance to see how this will move, but I'm positive that Safaricom has potential for return.
Pretty much. I'll be coming back to you on that, because we know Safaricom now, we're given that green light for their full entry into Ethiopia, and there's something that has been a silent conversation around that area, whether indeed they will still retain that 80% payout of dividends as part of what they get as income at the end of each financial year. But let's bring in WAHOME NGARI this morning. WAHOME NGARI, the influence of Safaricom on the local books. Something little happens that we start talking about 54 billion in terms of investor wealth wiped off the market because foreign investors decide to take a net selling position. It's worth talking about, isn't it, WAHOME NGARI?
Yes, that's what we're talking about. It's a big organization, but Safaricom is a leader in many things.
Yes.
And these corrections are nothing new. We've seen them before. Safaricom pioneered at 5 shillings, dropped all the way down to 2 shillings and 30 cents. And that fluctuation, those corrections are normal. The fundamentals are right. Safaricom is going into 5G now.
Yes.
Things in this country, they've been profitable, they've made their life easier, they've changed the way business is done in this country. And so there doesn't be anything fundamentally wrong And so for that, we have the comfort.
Yes. So let's talk about another area that led to that market destabilization, that sort of dropped our market cap heavily back to March levels. If you look at the banking quarters as well, I mean, when we're talking about our local books, then you will know that the only strong area is Safaricom. We have the banking quarters, we have the likes of EABL and all that. But again, the banking quarters were also going through a correction. And the analysts are saying, well, we expect this to continue in the near term. Why would the banking quarters also start correcting now, especially at a time when we're seeing glossy results, especially in the first 6 months of this WAHOME NGARI?
Remember, we've gone through a very tough time. I think we're still there because of COVID-19. There's been a lot of disruption in the business environment, organizations closing, we have people losing jobs. And obviously that affects the banking industry. And the fact that they got some positive results to show people who are dividend takers are smiling because they've seen an opportunity. And I think they're giving the confidence to the market. So while we see this correction, I think it is telling us the economy is resilient and the economy is holding strong, because the banks are sort of the indicator of the performance of the economy.
Yes. All right, let me bring in Stella then. Stella, let's talk about those banking quarters as well. I mean, you like to think, because of the way in which we've seen majority of the commercial banks in the country perform in the first 6 months of this year, I mean, everything is looking northwards, from assets, from gross loans, from net interest income. I mean, you will see exactly what it is. Then why are we talking about the likes of equity, the likes of KCB now correcting at this time of the year, instead of those stocks really growing stronger and stronger?
So, as my colleague, my counterpart has said here, we are facing a tough time.
Yes.
COVID-19 times, and the banking sectors have given us hope. So much profit growth and all that. And again, I insist on the point that market correction.
Yes.
Stocks exchange. So because the rise or the appreciation of prices of stocks might cause an anonymous impact on the economy. So this is it's a good thing, and it's a sign of hope, and it shows another good thing, another positive thing about market correction is that it will give opportunities for new buyers to buy these stocks. So this will give them an opportunity to buy the shares, and later on the shares will appreciate, because they will appreciate. These banking stocks have an upside. We can still hold, wait and see.
Pretty much, it's a wait and see. All right, let's get into that last one then for Safaricom. There have been talks that indeed that they will not be able to sustain that 80% payout of their income as a dividends once they fully get into Ethiopia. Is that the market getting ready for that, Stella? And you believe that once they fully start their operations in Ethiopia, they will still retain that policy for 80% payout of their income as a dividends?
Yeah, so this is a positive for Safaricom, considering that Ethiopia has only 43.3% telecom penetration.
Yes.
So it poses a good opportunity for profits and development. And the 15 years that Safaricom has been contracted there, this gives enough time to expand, to diversify their profits and their revenues. So this gives Safaricom, being the second telecommunication operator and the first private sector telecoms operator to go into Ethiopia, this poses a huge opportunity. And the only downside risk for Safaricom for these opportunities is the political instability in Ethiopia. But we see a positive future such that the political stability will continue improving to enable Safaricom to venture and diversify its revenues in Ethiopia. So the political instability is causing some maybe complications as a result of maybe the financing, because we see that Safaricom needed financing from the Development Finance Corporation, and this corporation had escalating conflict in Ethiopia. So, hoping that the political stability will improve in Ethiopia, this is a very positive opportunity for Safaricom to diversify and increase its revenues.
All right, and then lastly, WAHOME and NGARI, we do know that the country is approaching that electioneering period 2022. But when we see the foreigners on the local boost taking a net selling position as early as now, and we're coming from the effects of the coronavirus pandemic on our market as well, it's when we are trying to recover. Would you say that the jitters have already started, or just a bit too early to talk about the jitters of 2022?
Well, I think the trend is very clear. We've seen it for the last maybe 3-4 elections. Every time we get to the election period, everything goes south. And this is not any different. The politicians are at it. They started taking positions.
Yes.
They are very, very clear on what they want to do. And we can obviously see the polarization has started. And if you are a foreign investor, you want to secure your money. So if you think things are not going right, you move out of that market, you wait for when it is better. Of course, we got the people who actually like speculative environments. They want to buy when share prices go low. So we'll expect a bit of that. But again, for the whole economy, our foreign direct investments have obviously gone down. Even local real engaging, because we've seen how politics works in this country. And so you plan as an investor, you cannot fail to have that in mind. So we are likely to see the foreign investors, some of them will move out. The very daring ones will come in. They are people who are dogs of war. So they will always find their way in.
Pretty much. Let's move on to the next issue that we have for you this morning. Energy Cabinet Secretary Charles Keter said Wednesday that Kenya Power is now considering the option of reducing the cost of energy as a way to onboard more customers. Now, this comes days after the power utility firm withdrew an application that was submitted to the Energy and Petroleum Regulatory Authority, EPRA, in 2019 that sought to increase bills up to a fifth. Keter says that the utility firm will instead focus on lowering costs, curbing electricity theft, and recovery of debt from unpaid bills amounting to over 27 billion shillings. All right, now this comes at a time when power charges or energy charges in the country are at a high, and Keter is also saying that this is informed by the new directors at the company who now prefer cost-cutting sales, growth and reduction of power both from generators. Power bills hit the 38-month high in August following an increase in the fuel surcharge levied on electricity tariffs, adding pain to consumers already smarting from the high cost of petrol, diesel, kerosene and cooking gas. This also comes at a time when the East Africa Breweries Limited, EABL, plans to stop using Kenya Power for its Kenyan factories by 2030 in an ambitious 22 billion plan, a factor that goes to show how the cost of energy in the country is pushing firms to generate their own power from solar in a move to reduce that cost of doing business overlay. All right, let's look at the performance of Kenya Power before we talk about this move. You can see that year-on-year change in net income, and the latest one in 2020 represents a 459.2% change from what they netted in 2019. But even in 2019, that was a negative 92% change from where they were in 2018. Even 2018, there was also that drop, negative 38% if you go back to 2017. So the company that was already feeling the heat in terms of what they were bringing in. Let's move on to the next one. That's going to show us now the absolute figures. Yes, you can see from 2017 in terms of that income trend, they dropped all the way to 2018 again, 2019 to close in at negative 939 million 0.48 in 2020 as well. All right, let's talk about that this morning. STELLAH, is that the way to go for Kenya Power? And this new move by this new board of directors, does Kenya Power need a long-term plan or a short-term plan to get them out of the woes they are in right now?
Okay, so usually the power is a very key determinant of new investments into an economy.
Yes.
And reduced bills will always ease pressure on household budgets, given that normally electricity is among services whose costs have jumped so much, as we saw, and as you've said, they hit a high, another 8-month high on August. So what if they increase the prices as before they were bidding for an increase, a 20% increase in the prices of electricity? So given that it increased that much in August, what would have happened if the prices increased even further? So I really think that this move is very strategical and will aid in boosting Kenya's quest to make energy cost competitive and compared to other African countries like Ethiopia.
Yes.
So yes, Kenya Power needs a long-term strategy. It should be different. It should be a different approach, not the approach of rising price, of appreciating the price of electricity, because this one will definitely have an impact, a negative impact on the economy.
Yes.
Investors will shy away from investing into Kenya. And as you said again, EABL is looking for cheaper means of producing electricity or producing power for themselves. So this is a good strategy, and I think it is really it's feasible. And given that the company also plans to step up crackdowns on illegal connections, I think these are the strategies that Kenya Power needs to come back from the losses that they are in and to get over the debts that they are in currently.
Yes. All right.
Yeah.
WAHOME, NGARI, it's a visible plan. That's exactly what STELLAH is saying, that this is the way to go, as opposed to increasing the cost of power in the country so that you can recoup some of the losses that you're going through. She's saying that, well, if you then say that you're going to make your operations more efficient so that you don't incur a lot of losses in terms of the power purchase agreements that you're into, in terms of the power theft, then indeed you cannot mitigate your costs and then say you're quite a profitable venture. Do you agree?
Yes, I agree. Unfortunately, Kenya Power is a monopoly. It's a state monopoly.
Yes.
And a lot of times the culture is not right. We are all consumers. We are all customers of this organization. And that's why people are looking for alternatives. So as we're looking into the strategy, we have to think of learning Kenya Power as a business. Monopoly is like increasing costs when they run into financial trouble. But businesses don't do that. Businesses look for how to be more competitive, how to be able to deliver the services much easier. And so I know part of their problem is political. The people who are in politics are saying we need to connect so many thousands, and that's okay. But sometimes there's no financial consideration. So sometimes we go into a lot of cost in connecting people who sometimes may not even be able to sustain. But remembering that the power consumption, the demand for power is that high. If they are efficient in their delivery, if they are efficient, they are outage, and I'm not put on a machine. No, that's not what happens for the other organizations.
Yes.
I'll stop looking for alternatives. They're all looking businesses data now.
Yes.
Let's go to homes and see how many people now have a solar heating panel. And you see even now big corporates are going out. When your customers decide to drive away from you, then yes, you need to have an immediate way of stalling that runaway, but you also need to have a long-term plan of how you're going to run as a feasible business.
Pretty much. All right, let's cross over to STELLAH again this morning. STELLAH, let's look at those books for Kenya Power. And that's where my question comes from, and that's why everybody now is looking at Kenya Power and saying, what plan do they need? If you look at the year-on-year change in net income, you will see that from where they were in 2019 to where they closed in 2020, it was a more than a 367% change on the negative in terms of their profitability, and the fears that they might get worse. We've seen the first 6 months of this year, they began going into loss making. So you expect that again, because of the coronavirus pandemic and the deviation of the majority of the economy again into alternative sources of energy, then any plan that Kenya Power needs now, Stella, you and I probably have to agree on this, has to be either in the short term now, solve the issues they have there, and one that has to run into the long term, sort of trying to find a solution for Kenya Power. This one now, I know they've gone into debt collection services. They're now recruiting more debt collectors so they can collect some of the debt that is owed to them by households in the country, more than 60% of the debt that is owed to them, reducing that power cost and also renegotiating for those PPIs. Do those solutions look short term? Because Kenya Power looks like a company that is almost getting run down now.
Okay, so the main problem,
yes,
that is facing or that is causing losses to Kenya Power is the production of producing surplus.
Yes.
No, they buy surplus, but this extra capacity is not excuse me, is not sold to consumers.
Yes.
So it's like they are paying for nothing. So you buy something and you're not getting profit from it. So yeah, I agree with you that we have to get a short-term solution and a long-term solution. So yes, this one can work, but if the company focuses on of collecting debts from the consumers, and I really don't know how that one will be done or how they'll be able to achieve and collect like all the debts from the consumers. But if they focus and use this different approach,
yes,
rather than increasing prices, or like as the board of directors has said, it's focusing on cutting costs, I think this will it will help KPLC in the short term to get out of debt as they cut costs, because there's no need of spending when you're not getting the profits. So to make serious amendments to ensure that they remain attractive. So there's need for a short-term strategy and there's need for a long-term strategy. And this move that they are trying to make right now, I think it's a path that has light at the end.
Yes. All right. Yeah. Finally, as we clear this morning, WAHOME NGARI also weigh in on that as well. When a company's profitability trend has been dropping by margins of more than 367%. In fact, you would actually see, if you look at that trend, then you would know definitely that as from 2017 up to where we are in 2020, KPLC was a company that was headed south in terms of that income that they were posting. It looks as if it will make sense that in the short term, the only thing that you have to do is coerce EPRA to increase the cost of power in the country, and then you'll be sort of cutting back on the losses that you're making. Indeed, in the short term, they're trying to push for it from 2018 up to where we are right now. Looks as if EPRA is not giving them that green light. They've dropped it. Now, if you look at this other areas they're getting into, they're saying, well, we're going to get into debt collection in households. It's still black on exactly what they're going to do to get these monies. Number two, reduce the cost of power in the country. And then number three, renegotiate on those PPIs that we're getting into. For a company like KPLC, WAHOME NGARI, it would look as if now they need all these plans. But the most important one is revising that cost of energy upwards so that the company doesn't increase those margins of insolvency that they're in right now. It's a company in the red. Everybody knows that.
And I don't agree. I don't agree raising the cost of power is the solution.
Yes.
For a start. And that's why we're looking for alternatives as consumers. So if they actually increase it, we look for an alternative.
Yes.
And let's not forget our history. You remember Kenya Post and Telecommunication Corporation?
Yes, of course I do.
Do you remember the landline?
Yes.
Is it in use anywhere on the face of the...
No.
The services were so bad. You know, applying for a landline is a 3-month project. How much does it cost you now to get a phone, buy a phone, get a line and call?
Free, actually.
It's the same logic. This is business.
Yes.
Never renegotiating what Stella said. They are buying power that they're not selling to anybody, and they're selling very expensive. How long would it take to go and renegotiate those pacts? How long would it take to look at the efficiencies of their systems? They are so inefficient. In fact, I'm wondering what this debt collection is. Do you know the Boda guy? When I want him to do service for me and I call him, he can locate where I am. How come Kenya Power will ask me where is your place when they have to come and repair my electricity? It's the mindset. Technology is there. They connected me. I am not sure what debt collection they are talking about. If I've gone through the month and I have a meter and I'm not paying, they switch people off. So I don't even know where the arrears are. The other people are on tokens, and sometimes unreliable token system. Sometimes you can get the tokens, sometimes you can't get them. There's power. Sometimes it costs you more for the same amount of units. You know, increasing the cost. Even if you increase the cost and you're not efficient in delivery,
yes,
it's just a matter of time you're going to actually find you don't have enough money to run the business.
Oof. Quite a picture this morning there for Kenya Power. That's exactly what we do now. Yes, that this is a good way to go. At this time, I would like to say thank you very much to you, STELLAH and WAHOME NGARI this morning for making time to talk to us on this particular area of our economic review. And that's exactly what it is that we have for you this morning.
Thank you. Thank you for having me this morning.
Anytime, man.
Thank you, Simba.